Hi viewers, so let's start with today's analysis. I think uh, I would say a nasty day for the markets because yesterday when we are closing, we closed very close to 25,000, not a big dent as such, and then did not happen even when the US futures were down because of the downgrade from the US agency, which was after Finch and S&P, it was Moody's. So if all three big rating agencies have downgraded the credit rating of US, although it was in the price, but still some kind of a cut was expected in the US, but it did not happen. It opened gap down around 350 points or so. That was the low of the markets, and from there on, the markets actually kept on increasing, and it all was because of the analysts in US, which when they came for all the interviews and all the their views, etc. They continuously inform the participants and investors that these are old news. It is already in the price, and everybody knows that the debt problem in US is prevailing for a long point of time. So there was a lot of buying in the US markets, and that actually propelled the US markets higher. And we saw around Dow also closing around 150 points up, and Nasdaq and S&P also closing in green, which was actually, I would say, a surprise element, because if three rating agencies are downgrading your credit rating, it actually shows that the US economy as such is not in good hands, and it has a problem. See, markets are different thing, but to understand that there is a problem is a different thing. So there is definitely a problem of higher fiscal deficit in US, which cannot be cannot be forgotten, and that is why one mantra or one decipher now, which is continuously being told in US, is now all but US. So you buy everything but US. That is what the mantra has started in US. We are seeing markets higher, but don't forget, any negative news, you will see those markets crumbling like pack of cards, because those markets don't have inherent strength. The markets are being fueled artificially by a lot of government spending, by a lot of fiscal deficit, by a lot of debt, which is actually not the way to propel the economy forward. So, and even when doing all these things, the economy is hardly moving. It's around 0.8, 0.1, let's say 1% to 1.5% GDP growth for US, in spite of fueling such a higher government spending. So, let's see that Trump also has some tough job on his hands. Probably, if he's able to do it, that's fantastic. But the way he's, running his orchestra, it does not look like that we are moving any way closer to those kind of fiscal deficits coming closer to 3 to 4%, which actually US is trying to aim for. So, eventually, I would say that US markets are in a bubble. I have no hesitation in saying that US markets are continuously in bubble. Nasdaq is continuously in bubble, and any kind of bad news will see those markets crumbling down very fast, and those moments can come slowly, or sometimes in a haste. We don't know. Be careful. If you are investing in US, be very careful. And that is what is reflecting in the US dollar index also. It was lower in the morning hours yesterday, or in the afternoon hours when we were closing, but eventually when the Dow markets you know tried to close in green, then dollar index also inched up and it went around 101 or so. So that is about the US markets. Trump is continuously giving some statements here and there, but not very important. Uh, there's a fresh debate which has started now between US, Zelensky, and Ukraine, sorry, and Mr. Putin. So let's see if this war comes to an end. That Mr. Trump has spoken around 2 hours with Mr. Putin, and so has with Zelensky. Anyways, Ukraine is trying to end the war. They have no intention in doing that. But the conditions which are being put by Mr. Putin are such that no Ukrainian can accept that. And it will be a tough chance. It will be a tough ask now for ending those kind of wars. So I think the rhetoric will continue. We'll not see some major attacks either from Ukraine or Russia on the Russia-Ukraine front. But the war will, I think, still drag on, and it will keep on sucking everybody's attention, blood, sweat, everything, and some kind of uncertainty will always remain there. The markets have to bear with that. There's no other choice. Apart from that, bond yield also at one point of time actually came close to 4.56. This is the level which actually came close when there was uncertainty due to tariffs also. Last time also during tariff time, it cooled off from 4.56 and came to around 4.35 kind of levels. Today also it is cooled off and it's hovering around 4.43, 4.44 levels. So it is not able to sustain above 4.5. That's important. But it is still around dangerous levels because trading around 4.2 above and any bad news either on inflation front or on the interest rates, we will see this bond yields inching upwards towards 4.7, 4.8. Then the risk reward becomes very highly skewed towards bond markets, and we see a lot of selling in equity markets. So that should be careful. Gold also slipped because of this, US shrugging off this Moody's report. And I think initially at one point of time gold was up around 1.5%, but later on it cooled off, and today it was probably trading in red. Crude also climbed up. It actually was down around 1.5% at one point of time, but again due to US markets going up, it closed in actually green. Today also it's closing, trying to trade in green. So it's around 65, $66. That's the range which crude has now trading for last 1 or 2 months. So, and it looks like it will continue to trade around those levels. China has cut down the interest rate by 0.1%. It was on the expected lines. Nothing much on that. The problem with Chinese markets is from last 1 year, the interest rates have been dropped by around 1.5%. But the loan growth has decreased by 60%. So, in spite of all the cuts by the central banks of China, there is no loan growth. People don't want to take credit, people don't want to invest, people don't want to consume. That has been the reeling story of China, which is why they are under tremendous pressure, which is why the economy is under tremendous pressure because there is no consumption. People do not want to consume. Whatever soaps, whatever extra money is given in the hands of Chinese people, it is all going in the hands of savings. The expenditure is very less, which is why China is struggling because they want the consumption to go up to reduce their dependency on exports. But that's not happening. The country is afraid because people are talking about China plus one, and people want to I'm not very happy with the policies of Jinping. So people are afraid there, and moreover, they have burnt their fingers in the real estate market. As I told you a number of times, around $19 trillion of wealth have been wiped out in the real estate market of China. So they have lost all their savings. That's the problem. And now they are fearful. In fact, they're trying to build up their savings once again. But the problem is where to invest. So China has been buying a lot of gold, but the gold also has some kind of a limit. It's already trading around 92,000, 93,000 kind of levels. It's already seen a lot of uptrend. How much more legs can you have in one asset class? So the real estate market is not moving in China. Consumption is not happening. Stock markets are not moving. Where to invest? So savings are getting piled up. The interest rates are going down. The FD rates are not there. Debt market is not giving you much investment. So they're trying to invest in other countries. But again, you have restrictions. People don't like Chinese people to invest in other countries also. So China is facing this kind of problem. And on top of that, don't forget the tariffs are still not over. It's still 30% tariff on China, which is not less actually. And don't forget, China has also brought down the tariff for US only for 90 days. So we don't know, nothing has been signed, no deal has been signed. So as I told yesterday, also there is a lot of disorderliness in the world. Uh, China having its own problems. US, as you see, the credit trading going down. Trump creating all these tantrums. Consumption slowing down. GDP growth slowing down in US. Inflation inching forwards. There is a lot of fraud already in the top 7 stocks, which they call for Nasdaq. Uh, Bond yields are not coming down. They're around 4.5 or so. It is creating pressure for US markets also to not rise. That's the problem. So even Russia war is not coming to an end. That is still continuing. Uh, those kind of global uncertainties are still there. And the global growth is not there. That's the problem. So if global growth is not there, the world has to suffer. The world has to suffer, and then you can't expect the markets to go up endlessly like this. That's the whole issue. So globally, I would say that there are still question marks, there are still red marks. We should be careful on the global fronts. Both the US economy and Chinese economy are not doing good with the two biggest engines of the world. They're not firing on all cylinders. They're not actually in fifth gear. That's the problem. Coming to the Indian markets, so I don't think there was a surprise today in the markets. It was pretty well expected lines because if you've seen the data of yesterday for FIAs, they were short. They, trimmed their longs. They added shorts, and more importantly, they did a lot of call writing. And even more important, there was lack of put writing from the FIAs. Even 24,800, they were almost dry puts 24,900. So it was expected that the markets will fall below 24,800 and close below it. Some people are saying that there's a rise in corona numbers in Hong Kong, Singapore, etc., which is why markets were fearing. But I don't think so. Market wanted a reason to come down. There has to be profit because problem is even the Indian markets are not having those kind of steam to go up. The legs are not there because the earnings are not there. That's the whole issue. See, yesterday when we were closing, the US market were down by around 1% or let's say 0.7%. On the contrary, actually the markets are closing green. Today we got a gap up of 100 points or 124. Actually the gap up would have been higher, but we only got a gap up. Pre-market we got a gap up around 100 points, and when the market actually at 9.7 when the pre-market closes, we just 10 points up. So we could not sustain those gap ups, which is again giving you indication that there is a lot of resistance at those 45,000 levels, and the markets are feeling that resistance to go up. It is giving you all indications, which is why I told that it's not worthy to chase those last 500 points, even if they at all come, we don't know. Although the aggressive traders can take the long position, the stop loss 24,800, but that stop loss got hit today, and ultimately we lost money. No, see, any stop loss that gets triggered, ultimately a trader loses money. So I was always in the opinion that we should sit on the sidelines, which is what I have been doing for a long time. I told you about my profits, and I'm sitting on the sidelines, and I'm waiting for some decent correction. It might happen in 15 days, 30 days, 1 month, 2 months, 3 months, but I want to enter into the market with decent correction because the markets are trading on the upper range of the valuations, which is not giving you comfort. It is not giving you that kind of risk reward scenario. It could have been expiry kind of move today because a lot of stop losses are placed only for 800, and the market would have liked to punish those long positions. Anyways, there were a lot of long positions from retailers and from the especially from the retailers. But we saw yesterday the kind of price action, which was giving clear indication that we are expecting some kind of downfall in the market. So now 24,800 will also become a big resistance for you because a lot of call writing today which has happened on 24,800. Now you should enter into the markets only when the markets close above 24,800 with a stop loss of 24,800. Right? So we want the markets to go up and then cross this resistance once again because now a lot of call writing has happened on 24,800, and Nifty IT also has not performed. So yesterday Nasdaq actually covered all its losses, closed in green. There was a good report today from Nomura on Infosys. They gave a target of 1785. The stock was trading around 1540. It opened gap up also, but the entire gains were given up, and Nifty IT, which was around 1.2% up at one point of time, actually closed in red. Right? Bank Nifty gave away the very important support of 55,000, where there were a lot of put writers. So the markets have not respected the big support where the put writers were there. So 55,000, the Bank Nifty, there are a lot of monthly put writers, but it closed below it. I don't know if it sustain it or not, but the problem is at least it has closed below it. Nifty also has closed now below 24,800, which was one kind of a support. So the problem is that it looks like the breakout above 24,800 was false because it could not sustain for even 2 days. So now we want the closing above 25,000 for sure, and we can have a stop of 24,800 if we want to take long positions. But I would still say risk reward here is still not good. We want some more correction in the markets to enter the markets. As of now, the market is giving you an entry point, but not so good. So for aggressive traders, they can still go and buy with a stop loss of 24,550 now. If they want to go ahead tomorrow onward itself, they can have a stop loss 24,550, which is again a very important support, a very big support. If that support gets breached, then I think the trend will become neutral. Then will not be a buy on dips, straight away buy on dip kind of a market. It will become a kind of a neutral market where you think whether the markets are going down or whether the markets are going up. So then the trend will become neutral. It will not be either short kind of market, but it will not be long kind of market also. So until unless the market, till the markets are above 24,550, you can still go for long position with a stop loss 24,550. Or you can wait for this important resistance to be crossed of 24,800 and the stop loss of 24,800. Anything can be done. Third, which I am doing, is waiting for even deeper correction and just sitting on the sides and sitting on cash, waiting for opportunity. All three things is possible, whichever things you want to follow. Today, mid cap and small cap also we saw good profit booking. We saw good profit booking in defense. We saw good profit booking in railways. All these are signals. So after Indo-Pakistan war, actually the defense stocks were taking the mid cap and small cap higher. It was railway stocks or PSU stocks were taking the markets higher. All those baskets, or let's say the pockets of profit booking today, which means that some hands are booking profits and going away. So there are some hands getting exchanged. Is the selling over? We can't say. Today only was the first day. Maybe it's an expiry kind of a move as well. Tomorrow we'll have to watch and see if the market are supporting those 24,550 levels. I think markets would like to book profits because there is no trigger point. As I told you, there is no trigger point. There is no Fed meeting. There is no MPC meeting. There are no earnings now. There's nothing in the market to have a trigger to take it forward. अब जो earnings खत्म हो गया और कोई trigger है नहीं, market से ready किया है, you're sitting on the upper range of the valuation, then why will the markets go up? So chances generally ये रहते हैं that there will be a lot of profit booking and the market might see some down levels. From there, again, the hands will be exchanged. I told you yesterday also around 2.2 lakh crore cash is with mutual funds. They're sitting on the sidelines. If they will see some opportunity to enter into the markets, they will definitely enter into the markets and take it forwards. But that cash is there for a long time. We don't know what that cash is waiting for. But if the markets, and I think the FOMO can kick in when the markets see some decent corrections. So market is waiting for trigger. Market is waiting for some kind of bad news to give corrections on a massive scale. अगर कोई बड़ी न्यूज़ नहीं आती है on the negative side, on the positive side, the market will just move in a very short range of 24,000, 25,000. In this 1,000 points, the market will keep on moving. For Bank Nifty, I think that range can be 54,000 to 55,500, honestly 50,700. वहाँ पर market move करता रहेगा until unless you see either a negative news going downwards or a good news taking it forwards. Until then, I think market will do some time pass. It will remain in that range. Now, who can very cleverly trade these ranges should do that. And if at all you are not so skilled and the decision making is slow, or you're busy in your personal work, you're not doing full time trading, then wait for some deeper corrections and sit on the sidelines. There's no harm in doing that. But I would not suggest any fresh buying from here. That's what my take would be. But of course, you have to take your own decisions. As of now, market texture is looking slightly tired, waiting for correction, waiting for a news, waiting for a trigger. But there's a lot of liquidity, there's a lot of cash. There's no issue at all. I still don't see markets going down anywhere close to 24,000 below. But there's a lot of cash waiting. There's a lot of FOMO in the markets. Even HNI is sitting a lot of cash. The mutual fund is sitting a lot of cash. So I don't think that market will be so generous to give them a chance. Wow, markets are down now and you enter into the markets. Markets should not do that. Generally, they don't do that. So I would be surprised if you get a deeper cuts. So let's see. Let's wait and watch. So this is going to be my analysis for the Indian markets, that the world is in disorder. Bond yields are higher. China and US markets are struggling. You should not go on all the markets. They are into deeper problems. India is falling short because of trigger, because of valuations, and because of some kind of FIIs now slightly getting tired. So those would be the points to watch out for Indian markets. I would still suggest to sit on the sidelines and wait for deeper corrections. If not, aggressive traders can do. I have only told you the stop losses and the way to trade. You can do that. That can also be done. This is how the Indian markets are poised as of now. Let's see how it goes forward. So this was the analysis for today. Thank you so much for watching. I hope you would have liked the video. Thanks so much.